Now, our next guest says that the majority of banks don't do what they preach, adding that he thinks all they care about is profit and not their clients. Joining us for more, Professor David Costa, Dean at the Robert Kennedy College. Professor, thanks so much indeed for joining us. Interesting comments on the day, of course, that we've potentially seen, well, we've seen a preferred bidder for Northern Rock. Do you think investors should be still avoiding the banks?
Thank you very much. I think that it's a good moment to buy some of the equities in the banking space. However, we need to be careful and understand what happened here. And in order to do that, you need to sort of turn back time and understand why this turmoil in America happened. And the reason is because they've been giving credits to people that didn't deserve credit. So while from one side the banks claim to do whatever they want to do to support clients, they say at the aim of their mission there is supporting clients and do the right thing, they haven't been doing that. So the question is, are the investors really looking for those sort of sophisticated financial products? And the answer is probably not. So I would go into banking, but only on banks where I would see that they are not largely affected by what happened in the United States.
And where are those banks?
Well, there are a few opportunities. I would say, I would, for example, if you look at the Swiss market, I wouldn't look at the major two banks because the situation is not very clear yet. We don't know how deep is the problem. However, I would look into mid-sized banks, the banks which are not so affected into outside their own country or their own jurisdiction problems. And we have in Switzerland, for example, cantonal banks, but there are many other opportunities. However, I would stay away from the top players and try to look at the niche players. Try to look at those banks which have not been doing what the other banks have been doing and why they have those problems today.
Do you have any concern that the real cost of the credit crunch is actually that banks are going to rein in an awful lot of their lending next year, and that is actually going to impact business and therefore the economy?
I think it's certainly a possibility. I would tend, however, to be relatively optimistic upon the situation, because let's not forget that in the banking sector there are many banks which have not been affected at all by the subprime mortgage, meaning that they have absolutely nothing to do with the subprime mortgage problems. However, their share have been declining a lot in value. So I would see for the next year great buying opportunity from now on to next year to see really a growth in the sector. I see what you mentioned as a potential problem, but I would tend to be relatively optimistic. Let's not forget that many of those banks are turning very big profit and have very healthy operations. So not every bank is something to sell today.
With Eurozone inflation out this week, we're likely to see the impact of both energy prices and food prices as well. Are you playing those two themes, particularly on food? Are you engaged with it? And if so, how does one invest? Because it's not that easy.
Well, in terms of investments, one very interesting sector today which I would see as raising in the future is probably agriculture. So agriculture funds or agricultural equities, there is a great opportunity here for two main reasons. One is China. China will increase the demand of meat and they will probably get a more westernized diet, and the second reason is biofuels. So I would say agriculture, a lot of opportunities in this space, and at the moment, seeing the market being so down, a lot of opportunities to buy.
Yeah, and would you still play infrastructure as well?
Infrastructure is also really, I've been looking just today at what happened at SMI, and I haven't been proven wrong. I mean, infrastructure like, Swiss infrastructure, but also international infrastructure are growing. And because they have healthy numbers, they have a lot of growth opportunities. And what happens now in the market is partially justified by the subprime, but it's also partially much of perception. So when there is a negative perception in the market, the people start selling. And they start selling because they need to, for example, mutual funds need to face redemption, and they start to sell the good parts of their portfolio. And as such, I have seen many equities in the infrastructure space, but also agriculture, going down considerably in the last few months, and a great opportunity to buy now.
Professor, thanks for that. Professor David Costa, Dean from the Robert Kennedy College.
Thank you very much.